China now contradicting the Trump administration, saying the U.S. is to blame for the breakdown in trade talks. Scott Shellady, principal, the Cowguy Group at TJM, joins us now from the CME. Good morning to you, Scott, bright and early.
Good morning.
Well, at least early. I'm not so sure about bright. But listen, I guess the question people are asking is who's going to blink first. But as this drags on, how much pain is the U.S. economy going to feel?
Well, it's a decent size of the U.S. economy, but the U.S. economy can overcome it. The real problem here, Ash, is that what we have to worry about is the longer and more protracted this thing lasts. You're going to have the best way to put it is how long could how would a business come back from having their customers go elsewhere for 2 years?
Right.
Right. I mean, we might open up and be ready for business and have some sort of agreement a year and a half down, 2 years down the road. But are you going to get all your customers back? And I think while this takes longer, China's going to get used to buying from other suppliers, and that's the big problem. There's going to be a degradation. You're not going to get those customers all to come back. And I know that that's definitely something that small business is worried about, and absolutely the farmers. So I think that he's going to try to wait President Trump out. I think that he doesn't have any CNN polls. He's got nothing to worry about. Xi's got nothing to worry about over there. So he's just going to sit there, and I think he's going to give that a shot. So they're going to do this back and forth thing. We're going to get close and get far away, but I think it's going to take a lot longer than people think.
And, you know, we've just gotten some of the latest earnings from some of the retailers, you know, Kohl's, JCPenney, Home Depot. They were a little disappointing, and this is without the tariffs really starting to bite. So is that a concern?
Yeah, it is a concern. I mean, look, if you take the total amount of the tariffs that the U.S. consumers are going to have to pay this year, roughly $65 billion, that's about a third of the tax cut that Trump gave the taxpayers. So we can handle it, but at the end of the day, that's still going to be a big chunk, and we'd like to see gas prices to help offset that too. So we're going to be able to get through it. It's probably going to cost us about 0.5% in our GDP, which is not good, especially when we might be on the downhill side of this expansion. But the U.S. economy is still doing well enough that we'll be able to survive it. It's just the problem is once we do open the doors and we do get a deal, are all your Chinese customers going to come back, or are they going to get used to buying from somebody else? I think that's the biggest worry.
I think you're right. Just want to switch gears a little bit, talk about the Fed. We get the Fed minutes later today from their last meeting. Do you get the sense that because inflation has been so stubbornly low that the door is still open for a rate cut?
Yeah, I do, and I think that Bullard said something on the tapes overnight that he thought that maybe they overdid it with that rate hike in December. Yes, here's what I think. I think we're going to start talking about that ugly word, deflation. If we don't see any inflation from the higher tariffs coming into the U.S., if we don't get any inflation out of that, that's going to start to spook them a little bit, and then we're going to start worrying about deflation, and that's definitely a problem. And that's when I think you start to see the rate hike or rate cut talk kind of get more and more louder.
Yeah, we do not want to be Japan. Bottom line, Scott. Thank you so much again for joining us this morning. Really appreciate it.
No problem.